Hello traders, my name is Grega Horat and welcome to a new intraday video. This video will be just for looking for trades actually. I will highlight the Aussie dollar and New Zealand dollar against the US dollar compared to the S&P futures movements. Okay. Here we have the S&P 500 1-hour count, where we can see clearly a nice impulsive move in progress. As you know, we identified here a free wave retracement. I think this was a minor wave B here, but that's not important. The market is trading nicely higher since then, and I think that those who are trading S&P futures, and if you took advantage of this strategy posted on our Elliott Wave count page for the S&P futures long positions, then you really must be enjoying this move now, because the S&P is just going straight up. So what we have on the 1-hour count, I can see here 5 waves up within wave 3 of wave 3. This is the most typical extended wave. Okay, so in the meantime, while the markets are rallying, any fourth wave pullbacks should of course offer us a long opportunity. So here on the S&P 500 cash market, I can see that probably these prices are trading in late stages of this red wave 3, so minor wave 4 pullback could follow. I have here also the S&P futures wave count, okay, which is running 24 hours per day, so we have more data here to work with, and you can see here that we have minor 5 waves within this red wave 3, so this wave 4 pullback could occur in coming sessions. Okay, we are now also testing some Fibonacci resistance area around 1590. This is 161.8% of an extended red wave 1, and we also have here this wave 1 compared to wave 5 measurement in ticks. Okay, so this comes in also just beneath 1590, so I think this is a quite strong resistance area. And if we consider the Elliott Wave guidelines, that after every 5 waves correction follows, then of course this wave for pullback could occur in coming sessions back towards this 1580 before market breaks higher again. So if this market will continue to rally, and if fourth wave pullbacks will occur, then of course we could take advantage of these pullbacks on the FX market. So I have here this overlay chart between S&P futures, and just let me change this. I have here S&P futures. This in red is Aussie dollar, okay, and this in blue is New Zealand dollar. So you can see that markets are trading very tightly together here. So if we expect more gains on the S&P, then of course Australian dollar and New Zealand dollar should rally, but I think that New Zealand dollar could be maybe a better pair to trade on the long side, based in pips, because today, or I should say for the last 3 days, in the last 3 days I can see here that New Zealand dollar gained for around, just let me check, 230 pips, while Australian dollar moved higher for around 160 pips. Okay, so obviously the New Zealand dollar is stronger than Australian dollar at the moment, so maybe New Zealand dollar could be a better pair to trade on the long side rather than Australian dollar. But both pairs are trading tightly together, so if our wave count is correct on the one pair, then probably the other pair will follow this similar wave structure. So as we said, the price action on S&P futures, Aussie dollar and New Zealand dollar is looking very similar here. So firstly we will take a look now on the Aussie dollar. On Aussie dollar, here is our 4-hour count. We identified this wave 2, end of wave 2 right here, and this rally is impulsive. Okay, so I expect to see a corrective retracement, which will be part of a larger impulsive sequence here. The reason why I expect a pullback is on this Aussie dollar 1-hour chart, where we can count 5 waves up. This is wave 1, wave 2 pullback, extended wave 3, wave 4 pullback, and now wave 5 in progress. Just a second, maybe this wave 5, we will see another push higher here. This was wave 1, subwave 1, small wave 2, wave 3, wave 4, and now wave 5 of 5 in progress. So maybe another high here, and then we should be watching for a pullback, especially if we compare this to our S&P wave count, which is also facing resistance around 1590 area. Okay, we also have here this impulse channel, and as long as this channel holds, then of course this intraday trend is bullish. But as soon as we will see a fall beneath this trading channel, then this will be a signal that free wave retracement is underway in wave 2. And as you know, wave 2 will usually find a support in one of the previous fourth waves. So in our case, that comes in around 105.00 level and 104.70. So these are levels that we need to pay attention on. If we get these free waves of a pullback, then of course we should be interested to go long here. Here on the 4-hour chart, notice that same levels, 105, 104.70, are actually around these previous swing highs. Okay, so as you know, when resistance is broken, this was obviously a double resistance here. When resistance is broken, then usually in corrective retracement, which will be in wave 2, you will see a test of this resistance, which will then become a support. Okay, so this comes very nicely, is matching very nicely with just simple support resistance technical outlook, and of course with our wave count. So if we get this wave 2 pullback back to the previous fourth waves here, or back to these former swing highs, then I think this could be a very nice opportunity to catch wave 3 or 3 to the upside. So this pair is looking very good here, and I will definitely keep a very close eye on it. Then the next thing is this weekly technical chart. Notice that here we had on Sunday the market made a new low, which means it moved beneath the candle before. Okay, and then market, as you can see, is rallying sharply. So this is actually called bullish reversal candle, which tells me that market is very bullish and that uptrend will probably resume next week. So I'm definitely interested to buy this pair. Of course, Aussie dollar must close above this previous candle here, okay, which is above 104.95. So that's for the Aussie, waiting on this wave 2 pullback. On New Zealand dollar, we have a slightly different wave count, but still looking into the same direction. Firstly, let me check the weekly chart. You can see here that market is now breaking higher above these previous swing highs. So it looks like that we are on the way towards this high. Sorry. So there is a room for a trade to the upside here towards 0.880 level. So I think that New Zealand dollar could be also a nice opportunity for longs here, especially because this recent corrective pullback is obviously finished, and we know that when corrections are complete, you would expect a 5-wave rise in a bull market before the bulls could come to an end. Okay, so we need 5 waves. So as long we cannot count a completed 5 waves, we should continue to look higher. And here I don't see a completed 5-wave rally, so I will be looking higher here. On the next 4-hour chart, and that's the daily wave count, and here on the 4-hour chart we can see 5 waves up in wave 1, wave 2 pullback, and then very sharp move through this base channel. Notice a nice powerful breakout through this upper resistance line of this base channel, which usually occurs in the middle of a wave 3. Okay, so that's a very strong indication that market is rallying impulsively here, which means we will be tracking 5 waves higher here. So coming 4th waves could give us a long opportunity to catch wave 5, either this blue wave 5 or maybe even better black wave 5, headed towards, as we said, back towards these highs from July 2011. So that's it for today, guys, and I really hope we will get some solid pullbacks here. The markets are moving very powerfully here, especially the US stock market. So at the moment, with very weak US dollar index, I think that there could be some nice long opportunity on these commodity currencies such as Aussie and New Zealand. Okay, so we will definitely keep a very close eye on it. Okay, traders, that's it. Have a good day.